Hello, ladies and gentlemen, welcome back to Read. Today, we are going to talk about cognitive bias, the silent profit killers in trading. Are you unknowingly sabotaging your own trades? Most traders don't realize that their worst enemy isn't the market, it's their own mind. Cognitive biases silently drain your profits, making you take bad trades, hold losers, and exit winners too soon. In this video, I'll expose the top trading biases that are killing your gains and how to overcome them. Stay till the end because I'll also share a powerful mindset hack to remove these biases for good. So first of all, let's talk about what are cognitive biases. Cognitive biases are systematic patterns of deviation from rationality in judgment. In trading, they distort decision making by influencing how traders perceive information, assess risks, and act on market signals. Some common examples I have listed over here. The confirmation bias. Seeking information that support previous existing belief while ignoring contradictory evidence. Let's say when I come to the market, I have a previous bias that market will be bullish today, and I am not looking for any reasons to go short here, right? So when London, let's say I'm trading London session, when the London market opens here, okay, let me just select the brush. When the London market opens, okay, I have a prerequisite bias that market will be bullish today, and I am not taking any calculation that market can be short trade. Okay, I am seeking out news or anything like that to support my confirmation. Coming back to the second topic, we have overconfidence bias. Overconfidence, overestimating one's trading skills, leading to excessive risks. Okay, let's say I have continuously win 5 trades, 1 2 3 4 5, and in the fifth trade I'm so overconfident with my trade, I'm overestimating my trading skills, and I have open a trade with high risk. Okay, and that leads to a huge loss. This is also a major problem with traders. Then coming back to the third point, we have loss aversion. Okay, loss aversion is also a very popular bias. So holding on to losing trades too long due to fear of realizing losses. It's the acceptance part. Traders do not accept their losses. Let's say I have opened a trade, okay, on this breakout of this resistance, okay, and when I have opened the trade, my target, let's say, is here, and market goes back into pushes, and my SL, let's consider my SL would be here, and when the market comes back to my SL, most traders in their beginning phase, they move their SL to here. They have not accepted that this is a right position to stop loss. When the market comes back down, they will move their SL here. In effect, market will take this SL also. So in some cases they will move a little bit more lower. This is loss aversion. Okay, they avoid the losses, okay, in hope that market will in some time will go up, okay, to their targets, but they never do, right? So this is also a very major bias. So my most favorite one is the fourth one, the herd mentality. Okay, the bandwagon effect. This is very common. People seek out news in the market, and they base a bias based on that market is like giving very positive news, and market can be very soon pumping, right? So they have a herd mentality. They like take action based off the herd mindset. Okay, and this is also a great example I will give over here, that most of the time, let's say I have bandwagon effect inactive. How this happens: once I have opened a trade, let's say I have opened a market trade when this resistance got broken, okay, and my SL is down there, okay, and this is my SL. And what happens, market will go above little bit, and then they will come back and hit my SL, right? They will come back and hit my SL. So immediately the trader who have lost on this trade, they will make a short position, and they will put a SL above here, okay, and in thinking that okay, I was wrong on this trade, but let's go short. And this is where they again market comes back again for their stop loss, and then hit their stop loss again. Then again they will open a trade. So this is a cycle, right? So this is a bandwagon effect. They are thinking like a herd mentality. So this is how cognitive biases, these are only four I have mentioned over here. These are most common ones. There are more, but this is the most common one, and this is you have to check out on these biases to get profitable, right? So let's go ahead on to the second slide over here: how cognitive biases kill profits. So every trader has faced this frustrating scenario. You hold on to losing trades hoping they will bounce back. You exit winning trading trades too early out of fear. You ignore red flags. Okay, you ignore red flags because your analysis must be right. So this is very common with the new traders, and for the people who are in the markets for a little bit, um, like over 1 year 2 years, they are also facing on this over and over again. Okay, these mistakes aren't just bad luck. Okay, they are caused by cognitive biases, the hidden mental traps that sabotage trading decisions. Study shows that over 90%, right, over 90% of traders lose money, and cognitive biases are a major reason why. The good news: once you recognize these biases, you can systematically eliminate them and trade with clarity. Okay, so let's move on to the these are very few common mistakes. Okay, let's move on to the next slide: how to the main question, how to overcome, how to overcome these biases. Use a trading plan. Define entry exits, as I have made a video specifically on this one over here. Okay, make a trading plan. Okay, what is the setup, this one. Okay, you can go ahead and watch this video on my trading channel. You can also go ahead and subscribe to my telegram channel. This is my link to the telegram channel, and this is where you can find out what is the trading setup. Okay, this is the first one, first topic: use a trading plan. In advance you should have defined an entry, exit, and risk rules before every trade. Okay, right? So this is how in the second one: automate decisions, set stop loss, and take profits before entering. Review your trades. A trading journal helps spot bias and pattern. And the fourth one is, on the third one also I have made a video. You can go ahead on this one also, and review your trades. I have this Telegram channel over here. Okay, you can see this is where I post my trades. Whenever I take a trade, I just post it. Okay, yesterday and today was not a very good luck for me, but you can see weekly results I post here. Okay, you can see let me just show you here. You can see for the third week of March, 17 March to 21 March, two profits, two losses, 3% profit overall that week. Okay, and I will post the results for this week at the end of the video. You can go ahead and join the channel and watch out for yourself. Review your trades, a trading journal, very important. You have heard from a lot of people. Okay, and the fourth topic is meditate and stay emotionally neutral. Okay, mindfulness reduces impulsive decision. I have made another video on this one, meditation for traders. You can go and watch this video as well. Okay, meditation for traders. Okay, this one is very important. You can first you can go watch the trading plan, how to execute it. Then you can go ahead and make a trading journal on the Telegram channel, as I've showed you. You can make your own trading journal on your copy or on an Excel sheet. And then again, on the fourth topic, you can see meditation. You can go ahead and watch this video as well. Then follow the data. After all of that process, you can just simply follow the data. Okay, not your gut, because that is always risky strategy. Okay, that's not a strategy, that's a gambling. Okay, so this is how market you can overcome all these cognitive biases. Okay, and you can see how this works, right? So final thoughts, I would like to say that cognitive biases are silent profit killers because they operate unconsciously. Okay, undermining even the most well thought out strategy. By recognizing and managing these biases, traders can improve consistency in trading, and enhance risk management strategy, achieve sustainability, or profitability over the long term. So trading success isn't just about mastering charts or market trends, it's about mastering your mind. Cognitive biases are inevitable but not insurmountable. By cultivating self awareness, discipline, and emotional resilience, you can turn these silent profit killers into opportunities for growth and success. Start addressing your cognitive biases today and watch your trading performance transform. Right? This is very important. Cognitive bias. So that's all, I guess. That's all for this video. If you have liked this watch, if you have got some value out of this video, please recommend to your friends. And do this journaling part is very important. That's all for this video, and I'll see you in the next video.